What you're about to watch is a recorded live interview with ARK Invest's cryptocurrency division, where we get to go deep on cryptos, NFTs, and more. I do have to add a disclaimer here though, so on screen now you're going to see a disclaimer that ARK Invest requested be added. There were also segments of this recorded live interview that had to be removed. Unfortunately, I was not able to post this live, but we can blame the SEC for that. That is not ARK Invest's fault. I love ARK Invest. So without further ado, let's get into the video. I do want to quickly mention though, make sure to get yourself 30% off using the coupon code down below on those amazing programs for building your wealth that does expire in 2 days. Thank you very much for watching. Let's get into it. Hey everyone, me Kevin here, back and super excited today to be talking about the future of cryptocurrency, to talk about the future of crypto, especially Bitcoin and Ethereum, and I'm sure we'll talk non-fungible tokens as well, and multi-layered art. Oh my gosh, there is so much to talk about and so much to understand. I had to bring in an expert, and who better than an amazing analyst over at ARK Invest. Yassine, please introduce yourself. Tell us about yourself, what you do, and how you know so freaking much about the cryptos.
Thank you so much, Kevin. Great to be here. I'll start by saying I've watched a few of your videos, and the vibrant energy that we can feel through the screen is always just a pleasure. So thanks for everything that you do.
All coffee.
It's all coffee. It's funny. I don't drink coffee. So
probably better.
It's I can only imagine how much of a boost that might be. But yeah, it's great to be here. So I, like you sort of prefaced, am a crypto analyst at ARK Invest. I joined in 2018. So actually in the depths of a bear market right after the 2017 crash. So a little bit of context there. Prior to ARK, I was at the University of Pennsylvania. I'm studying systems engineering and finance. Actually very early on, told myself that I don't want to follow the traditional route of investment banking or consulting and going through kind of the traditional recruiting process. So, ended up being interested in the venture capital world, which like as a graduate or as a student is sort of difficult to tap into, but cold emailed a bunch of VCs, had an opportunity to intern at one. And there they gave me the free rein to explore whatever industry I wanted to from both the tech and investment perspective. And so that was actually right during the 2017 bull market. And I chose crypto and told myself that this is definitely what I wanted to do full time. So committed to figuring out a way to do that full time. Found ARK in 2018, my senior year, actually through Twitter. We can go into sort of the open research ecosystem that ARK prides itself on. DM'd one of their former analysts, told them I was interested, started sharing some random content in crypto myself, and then the rest is history. So I've been there ever since, and it's been quite a fun ride.
So what you're saying is the way you got your position at ARK was by sending them free research.
In a lot of ways, that's exactly the mindset, at least. I think that, we often get so much inbound of like, okay, how do you join ARK, or what's the sort of approach to making a name for yourself in the industry, and the real answer to that is by leveraging the internet. The internet is a tool where you can basically share an idea, and it's very meritocratic in that if that idea is good, other people will share it. And if you keep sharing ideas without any expectation of anything in return, eventually someone you want to see it sees it. So that was sort of my approach, where it's like, I'm just going to start a Twitter page and just start tweeting about random things. And I actually started by just synthesizing things that were interesting to me. It really wasn't original thought. It was just a lot of smart people saying really interesting things, and maybe figuring out ways to repackage that. So, ARK, as you probably might know, we were pretty active on social media, and it's by design. It's an explicit part of our research process, where we think that information is increasingly becoming commoditized. And there's no longer a value add or a competitive edge in being black box in your approach to research. Rather, by sharing your research, not as it's complete, but as it's evolving, you can really get immediate feedback and be able to sort of battle test your assumptions in ways that sort of maybe a 5 to 10 person investment team in internal operations might not be able to do as effectively. So part of Kathy's reason for founding ARC was because traditional compliance teams weren't set up to handle kind of the research involved in identifying disruptive innovation more broadly. And so, the sort of social media presence is really more of a research angle than it is like a marketing angle. And so, I found my job because I found a tweet that I thought was interesting and DM'd the analyst, and then the rest is history, right? So to all so cool. To all the people who are sort of aspiring to
to get into this, I mean, it just goes to show, like, if you provide value to society, like, good things can come back. So this got you a seat at ARC, essentially. So you're, I imagine, a full-time employee, probably, benefits, everything, which is amazing. And I'm speculating, and maybe you can enlighten that. And I want to talk about crypto, obviously, but what's like the work-life balance like? I mean, do you have set hours, or are you just always on? I mean, you got a meeting right after this. Is Kathy on you with a whip? What's going on here?
Yeah, sure. Let me just close my door 1 second.
Yeah, take your time. I'm so excited to talk about crypto too. We'll be talking about everything. So
yeah, absolutely. I mean, crypto, that's the fun part. We'll get into the fun part.
Yes.
But yeah, I mean, sorry, can you hear me?
I can hear you. You're good. Yeah, I've just given you the spotlight.
Oh, God. Okay. Great. So yeah, I mean, the work-life balance, well, it's funny because the crypto markets trade 24/7. So, if you fall into the rabbit hole very quickly, it's like you're kind of just constantly working all the time. Thankfully, I enjoy what I do. But to be honest, it's the analyst role is not really defined as traditionally as like maybe a traditional investment shop might define it, where it's very entrepreneurial in its approach, where analysts are really able to define the roles as what they want, and in terms of like there's a lot of encouragement to take initiative, and the base is obviously covering your theme. So we're not really divided into sort of sectors. So I cover crypto. We have analysts that cover genomics and energy storage and DNA and DNA sequencing and AI, robotics. So everyone covers their own theme. And then from there, it's just trying to figure out new interesting ways to think about the space. So coming up with sort of provocative research, sharing that research as it's evolving. And then, of course, figuring out ways to translate that research into actual portfolio management and investment decisions. So, every morning we're on a morning meeting with Kathy, and she is basically saying, okay, give us the news. Is there anything actionable? Is there anything interesting? And then from there, she's able to synthesize and sort of and end up making the relevant portfolio management decision. So, it's really just a front row seat into all things tech, however you want to define that. And the work-life balance is it's fine. It's nothing.
Good.
Yeah, it's fine.
I mean, I guess you can probably essentially work market hours and do your research whenever you want outside of those, which is kind of neat. Or even within them. So let's touch on crypto, though, because there are a lot of people who are very skeptical of crypto. A lot of people even say that one of the reasons Tesla started its sell-off was because they didn't agree with money going into Bitcoin. One of the theories I have is that Bitcoin might be very volatile, but I don't see it as risky. I don't necessarily associate that volatility with risk.
I think that the interesting thing is the hardest part for Bitcoin, in our opinion, was to get from 0 to 1. You have to understand that like the evolution of Bitcoin didn't start with like a market price where you can buy Bitcoin on exchanges. It really started as this digital-like collectible that was part of a very small group of cypherpunk enthusiasts who were just cryptographic or cryptography nerds. And that sort of evolved very organically into something that could potentially be used as a mechanism to, store and transfer value and create sort of this internet native monetary commodity. So, that's I would say the first thing of like, can Bitcoin go to zero? I mean, I think that the strongest Bitcoin holders will tell you that at any opportunity they see a dip, they'll probably be accumulating Bitcoin. So there's what's called sort of those buyers or holders of last resort. And there's a big enough holder of last resort where, it's very likely that they're going to be buying before Bitcoin goes to zero. And then on the volatility, I think that's a really interesting point that a lot of people tend to misunderstand, Bitcoin's volatility, right? They basically point to it as this store of value deal breaker, right? Like, why would anyone want to store value in an asset that's going to have these dramatic day-to-day price swings?
It can be crazy. But then again, look at stocks today.
Exactly. But if you think about it, Bitcoin's volatility in a lot of ways actually highlights the credibility of its monetary policy. So there's something called the impossible trinity, which is a macroeconomic policy trilemma, which I urge you or the viewers to look into. But it illustrates that when forming monetary goals, you have these policymakers that are able to satisfy 2 of 3 objectives. They can never satisfy all 3, but they can satisfy 2 of the 3. And those
this is called the trinity. I'm going to write this down.
Yeah,
the monetary trinity.
It's a macroeconomic policy trilemma. If you Google macroeconomic impossible trinity, it'll basically highlight sort of what policymakers think of when dictating monetary policy goals. So the 3 options are a fixed exchange rate, free capital movement, and an independent monetary policy. So something like there you go, exactly. Something like the classic gold standard, the fixed exchange rate and free capital movement were chosen, and an independent monetary policy was sort of sacrificed. With Bitcoin has basically chosen an independent monetary policy, so it's not backed by anything really.
Right.
And free capital movement, meaning that anyone can go in and out of the asset as they please. And so as a result of that, you don't really have a fixed exchange rate. What that means is that it is being priced exclusively as a function of demand. Because there is no sort of stable peg, you're naturally going to get these price swings. And it really just highlights that anyone can go in and out of it and that it is not tied to any specific monetary policy. You just have to think of Bitcoin as choosing a different set of trade-offs when dictating its monetary policy. The volatility is coming, but the volatility exists, but in return, it's really just an emergent property because you have this scarce asset that only has 21 million in circulating supply that anyone can access. I got to
ask about that. I mean, you've got like Ether and Bitcoin Cash, and now you've got Cardano. I mean, there's so many of these other currencies. What's to stop, the next Bitcoin from coming around and people are like, man, BTC too slow. 10 minutes to verify transactions. I'm out of here.
That's a good question. And we often get that critique a lot, right? Bitcoin is the MySpace to Facebook. It's too slow. It's just basically not going to sustain itself over the long term. Again, I think the framing here is twofold. The first is, I like the famous quote by Thomas Sowell where he states, there are no solutions, there are only trade-offs. So that as a framing in the crypto world is extremely important, where you can't have this perfect network where if you're going to see this is the Bitcoin killer, it's faster, it's more decentralized. It's not without explicit trade-offs. So, to start, like Bitcoin being slow is really a trade-off that it makes for being highly secure and highly decentralized. And when you think about the value proposition of these networks, it's not so much as a convenience of payment. It's not to really compete with Visa. It's to compete as an alternative to central banking, where you need high assurances and guarantees to settlement. And you can't have those high assurances and guarantees without the security guarantees that Bitcoin introduces. So that's the first thing. The second thing is, how exactly are these assets, how do they accrue value, right? What makes these assets valuable? Why is Bitcoin more valuable than another asset? Because at the end of the day, this is open source software, and it is a technology that technically can be replicated. But I think that Bitcoin's value specifically is not replicated, or it can't be replicated by software alone. And you have to actually look at the network effects that Bitcoin has built that are irreplicable. So an example that we like to give is, imagine that you were given the source code of Facebook, right? And you're like, okay, here's the source code of Facebook, but you can't get the 50,000 employees, you can't get the 2.6 billion users, you can't get the leadership and the team, but you can get Facebook source code. So in the same way, it's like, okay, well, here's a Bitcoin Cash or a Litecoin that looks cosmetically similar to Bitcoin, but you're not getting the infrastructure and liquidity. You're not getting the brand and recognizability. And network effects, especially when it comes to a non-productive asset like Bitcoin, is its most important moat. And it is one that is sort of defensible in ways that technology alone cannot replace. So the better, quicker, faster, cheaper, if no one is adopting it, isn't going to really yield any benefits to the end user. So that's sort of our take there, is that network effects are the most important thing, and Bitcoin has been able to build a network effect that is, frankly, we believe, not replicable.
Now, you invest, I believe, at ARK in the Grayscale Bitcoin Trust because you can't hold Bitcoin directly in an ETF. Correct me if I'm wrong on that. Can you buy the Ether or the new one that just took place, number 3, Cardano? Can you buy that?
So there are questions. You're right in that we are a 40 Act product, or ETFs are a 40 Act product, and so we can't hold the underlying. But there are securities that, like the Grayscale Bitcoin Investment Trust, that track Bitcoin's underlying. But even those have specific limitations as well. And so you can imagine a scenario where equities sell off and Bitcoin rises, and you're basically stuck being overexposed to Bitcoin in this specific product. So all that to say that our exposure to Bitcoin, in these products have probably been relatively underweight our conviction. And when it comes to other products, like in the ETH Grayscale product or the Cardano or whatnot, those, even if we were interested in other assets, and there are some interesting assets, I think Ethereum is definitely an interesting complement to Bitcoin. The liquidity there is simply not something that it's not liquid enough for us to gain exposure at scale to those specific products. In addition to the massive premium that you get on those products relative to NAV. So I
don't want to go down like a regulation like rabbit hole, but I got to ask you. I mean, it sounds to me like with this qualified income rule or unqualified income rule, here's regulation again, kind of potentially limiting innovation. Am I wrong to say that?
So with this rule specifically, not really. The reason why is because it's actually a commodities rule. So it's the same thing if you had gained exposure to a gold ETF in an equity ETF. But that doesn't mean that your broader point is not sound, in that, we, especially in the US, there needs to be careful consideration, we believe, in, promoting Bitcoin and crypto and technology more broadly, in a way that doesn't stifle innovation and that doesn't dissuade entrepreneurs and investors from really, deploying capital in these jurisdictions versus others. And with Bitcoin being a neutral, borderless, jurisdiction agnostic asset, there's a lot of interesting game theory at play, where for every country that is going to disavow it, you will have others that create havens for it. I think that there certainly needs to be more thorough consideration of, I would say, being more open to regulation than being more stringent.
Got it. I want to talk, and it is very interesting too that you're suggesting that maybe you're underweight your conviction on Bitcoin. I think that's fascinating. Talk to me about Janet Yellen. Is she going to be a big risk to Bitcoin here? Is she just clueless? I mean, she's calling this, an illicit activity tool when we know that Bitcoin is used less for illicit activity than cash is. Is she just uneducated? Is this the, first 2 months on the job cluelessness? What's going on here? And all respect to Janet Yellen, okay? But, I'm curious.
That's a great question. It's actually something that we talked about internally at ARC.
I've got bugs. I know it all.
Exactly. He's just got the little chip on the back that has access to every conversation. But it was actually in response to her first point of critique, which we actually tweeted about, that was around criminal activity and Bitcoin being facilitating criminal activity. Our response to that was actually, this is a positive for Bitcoin. If Yellen is still looking at criminal activity as the primary point of critique for cryptocurrencies. What is interesting as well is the next month, so basically the month of February, where she had basically criticized Bitcoin for criminal activity in January, and then in February she's like, this is a tool for speculation and it's inefficient. So she went from criminal activity to another recycled common critique of this is just purely as a means for speculation.
Right.
So it actually gave us comfort, and in a lot of ways, I expect the United States and these global hegemonies to one day come out and say Bitcoin is either one, going to be a global threat to our monetary sovereignty, in which case we need to figure out a way to stop it, or we need to figure out a way to complement it with our existing operations. So whether that be allocating it as a portion in their central bank reserves or whatever the case is. And we're starting to see that in other emerging markets like Nigeria outright banning Bitcoin, and then senators coming out and saying, this is basically making our own fiat currency worthless. That's the sort of the tone that we expect, or the narrative shift that we expect. So for Yellen to come out and use, FUD, or fear, uncertainty, and doubt, that has been recycled over the last decade now, means that, we're still early, and they're not really paying attention to this.
I like that argument, and I love how you turned it around, because really what I love is when I talk to people about how phenomenal Tesla is and how undervalued their energy business is, for example, and I get people going, what, Tesla? I'll never drive a Tesla. I need a gas car. I think to myself, like, still early.
Yeah.
It's a good thing.
I don't know if you saw Elon's tweet like a few days ago, but showing like a horse carriage newspaper that basically said, like, it was basically saying, are you really going to drive automobiles and you're going to have to do maintenance and change tires? Like, how much more expensive is that going to be versus just, riding a horse carriage? That's so brilliant. The analogy was, okay, well, electric vehicles to the internal combustion engine is going through that same evolution and skepticism.
That is so brilliant. I love that. I want to talk to you about energy with Bitcoin. This is a big issue. Obviously, currently the energy usage is it's high, but it's been relatively flat. Like it seems like its usage has been going up, but its consumption has been relatively flat relative to that increase in usage. So it looks like there's some kind of efficiency built into the system. I don't understand that. How can they make it more efficient when it becomes harder to mine? Can you speak to that a little bit, or you get less when you mine?
Yeah, sure. So I'd say it's taking a step back and sort of providing some sort of explanation for the use of mining. So mining is basically the mechanism by which you can eliminate that trusted third party or intermediary, right? Where if you think of a traditional centralized system like a PayPal, you have a single authority that is able to facilitate transactions and secure the network and add credibility to the institution for participants who are involved, right? If I get frauded on PayPal, I'll email PayPal and let them know, and they'll issue a chargeback, or they'll say, yeah, there's an error in your account, and they will facilitate transactions from one PayPal account to another. The value proposition of Bitcoin is that it eliminates that need for a trusted third party, and instead replaces it with economic incentives by which anyone can, if they see an economic incentive to do so, contribute to the network. And contribute to the network means facilitating transactions and securing the network. So miners have a dual role of basically bundling transactions in a block and verifying that those transactions are indeed legitimate. And in return for that, are issued with newly mined Bitcoin or newly issued Bitcoin. So in return for their services, they are they receive a compensation in the form of Bitcoin. Now, the energy consumption, which many deem as inefficient, is actually a fundamental feature in adding credibility to Bitcoin. Right. The analogy that I like to give here is with gold, right? Gold is valuable and has converged as a universal store of value, not because it's shiny and it looks nice as a tooth replacement. It's because it had specific properties that deemed it suitable to preserve wealth over space and time. In addition to being fungible and something universally recognizable, it was also something that was very hard to produce and still is. There is a clear, explicit proof of work that gold miners have to go through that adds to sort of the unforgeable nature of the asset, right? Unlike the sort of US dollar, which can be printed with like a stroke of a keyboard, gold, you need to basically prove and create an explicit cost to mining gold. So in the same way, Bitcoin requires that prolific resource consumption and that poor computational scalability to unlock the security guarantees that make it this global, uncensorable monetary system. Now, when it comes to sort of the misconceptions that we're seeing today, and I think the biggest one is that energy consumption does not necessarily equate to pollution or CO2 emissions, right? So there's a question of the energy mix that miners are using to secure the network. The mining industry specifically is a perfect competition, and it is it's ruthlessly competitive in that they are exclusively profit maximizing entities, and they are looking for the cheapest access to electricity in order to mine their Bitcoin to optimize their operations. And it so happens that renewables are converging as that cheapest access to electricity, as well as stranded energy assets that otherwise would have been dumped as being a mechanism to basically unlock stranded energy assets to mine Bitcoin. So all that to say that the energy source that is being used to mine Bitcoin is either would have already been wasted, right? So like basically natural gas flares or peaker plants, right, during the off season where it costs more to dump than to mine Bitcoin, or as renewables. So in China, most of the Bitcoin mining is actually hydro. And so I just think in general, the reason why Bitcoin's energy footprint is kind of their hands-on and eyes on the energy footprint is because it's just much easier to quantify than traditional banking systems. But if you were to quantify kind of the lights on at a JP Morgan at every bank branch, and the number of computers that had to go on, and the amount of resources that are required to sustain a traditional legacy system, an apples to apples comparison would actually show that Bitcoin is far more efficient.
I mean, think about it. Like the Federal Reserve has like 2,000 economists at it. You know, that's 2,000 people with houses, air conditioners, and computers, and they're just talking about printing money. I don't want to oversimplify their role. Okay, I respect the Fed a lot, but okay, so this is interesting because ordinarily when you hear, oh, well, Bitcoin's using renewable, you think, okay, fine, but they're taking away potential renewable energy that could be going to something else, somebody else's use. But what you're saying is because it's a perfect competition and we're constantly looking for ways to reduce our electricity costs, it actually makes sense to produce more solar fields in Vegas or hydro dams in China, because that's going to give them a 1% or even, let's just say it extreme here, a 1% competitive advantage over the next dude mining. And so it incentivizes them to build this infrastructure, and really they're creating something that wouldn't have been there otherwise. Is that what you're saying?
Yeah, that is exactly what I'm saying. But in addition to that, I'm also saying, and that's really interesting that you bring that up. You're like, well, it could have been used for something else, right?
Right.
And what the market has told us is that there is a clear demand to use it for in order to back a non-state synthetic monetary commodity. And in a lot of like Bitcoiners' views, I would say that there's like no more noble of a use of energy than to back this permissionless open monetary network that exists outside the purview of legacy systems. And so ultimately, it is. And it is a twist. And it's like, it's something that Bitcoiners like to bring up, but it's like, it's really just a matter of opinion as to whether something like Bitcoin should exist. And if something like Bitcoin should exist, which clearly the market is telling us it should, then it just converges towards perfect competition. I can promise you that if miners see that there is no means to be profitable by mining Bitcoin with traditional fossil fuels, then they're going to go to renewables or whatever the case is. So that's the framing. I maybe took the most extreme stance, but I feel like it doesn't really give merit to that stance.
I know it's totally fine. No, I get that. I want to talk about that though. So non-state money, personally, I don't ever see the dollar going away. I do think there will be a digital dollar. I do think that the Federal Reserve will have the Fed coin or the dollar coin or whatever they call it. I do think the blockchain or just blockchain technology, in general, is phenomenal. And I do think that that'll probably get incorporated into our monetary system. But I don't ever see them getting rid of something that they can use to print as a primary source of currency. I could see Bitcoin in general being treated like a gold, but not as this sort of it's everything that we use. Isn't it a risk factor that maybe people are pricing in that Bitcoin's going to replace the dollar, and when that doesn't happen, Bitcoin crashes?
So that's a good question. And that goes back to like basically what you define as success in Bitcoin, right? I think that there's a massive spectrum of opportunity that Bitcoin presents. On one hand, you have, the early days of just, okay, this is just a weird internet magic money for just a bunch of nerds. And then I would say in between that, you have, a digital gold, right? Where it's a $5 to $10 trillion market cap as being sort of this internet native store of value. Doesn't necessarily compete with fiat currencies. But it is something that is used as an alternative asset, like real estate or just general commodities. And then I would say one step further is as a potential alternative to fiat currencies in weaker regimes. We actually size Bitcoin's opportunity as a catalyst for currency demonetization in emerging markets. So I would say 10, 15 years ago, we had a Venezuelan version of Meet Kevin, who was basically saying that the Bolivar would probably never go away. And as we know, that didn't turn out to be the case. And so the argument is that, yeah, humans, we should basically remove the decision making when it comes to monetary issuance away from humans and into something that is open, predictable, and verifiable. Do I think that Bitcoin is going to replace the U.S. dollar? No, maybe not in our lifetime. I don't think that's the case. But do I think that it's that Bitcoin potentially replacing the U.S. dollar is priced in at these levels? Absolutely not. If you look at Bitcoin at a $1 trillion market cap at the high, I think now what is it, 800, 900 billion. And you look at sort of just gold as a $10 trillion market cap. If you look at the M2 base money outside of the top four currencies, so if you think outside of the yuan, the yen, the euro, the dollar, so you assume that those aren't going to be replaced, but that there's a mechanism by which Bitcoin captures the some share of outside of those top four currencies. That M2 base money, that's a $46 trillion base money, and if Bitcoin captures about 5% of that, that's a $2 trillion opportunity there alone. So there's a lot of room for Bitcoin to grow before it becomes a threat to U.S. monetary sovereignty. But at its full potential, it ends up basically being a black hole for fiat currency. And if you think about fiat currency, I'll push back what you said a little bit in saying that it's really only a 100-year phenomenon. If you just look at the U.S. dollar, it was once backed by gold. That was about 50 years ago only. And so to think that, in the next maybe century, we're not going to see a mishap. And if you look at the evolution of global reserve currencies over time, the franc was at one point, the pound. And the sterling, those end up basically, trending towards obsolescence over the long term.
Are you taking a Peter Schiffian approach here of the dollar's going to crash big time and you need to get out of the dollar ASAP?
Not really. I'm not really a macro expert, so I'm not gonna make speculations on the strength of the dollar. Okay. I will say what's funny is Peter Schiff is a massive Bitcoin skeptic, which I think is quite ironic and kind of funny. But I would say that the macro tailwinds that we've seen in the last call it few years has really made a compelling case for Bitcoin as a hedge against general currency devaluation. It's, I think, starts with, emerging markets. It's very interesting to even see like correlations between yuan devaluation and inflows into Bitcoin. It ends up towards, a potential weakening of the dollar. And if that's the case, taking that sort of hedge against economic apocalypse by allocating into Bitcoin, I think is a sound case.
You mentioned, this is very interesting because I kept thinking about Bitcoin as maybe being something to compete with the dollar, but we're not so worried about that. We're worried about the Zimbabwe, the Venezuela, where basically what happened here is you had this complete collapse of trust of central banking authority in these countries, or even government authority, because many central banks are linked. They're not independent of their governments like they are here in the United States, supposedly. But we won't go down that rabbit hole. So what you're saying is, if you have a Bitcoin, you don't have this risk of these crises in maybe Venezuela or Zimbabwe, because there's no way you can have hyperinflation because you're really pegged to supply and demand driven economy, and you could actually stabilize emerging markets by using Bitcoin outside of the big four, as you mentioned.
That's exactly right. There, I think, really interesting points that you bring up that we can break down a little further. I'd say the first thing is yes, Bitcoin being a borderless sort of asset and network, right? Where it works in the exact same way it works anywhere around the world. And it's in one that no one controls. I would say that the second is talking about the hyperinflation in the Zimbabwe and Venezuela really just brings up the broader point of how all of the monetary discretion that humans have is a slippery slope. I can tell you that Zimbabwe never really considered that their currency was going to be hyperinflated. It was just a complete mismanagement of that. And so if you even think of like the argument of the recent injection of stimulus, where even the USD's base is exponentially increasing. It's gone parabolic just this year. What's not to say we're not going to see even more unconventional monetary policies and what people like to call QE infinity, right? We're just gonna sort of inflate our money away. And obviously that's definitely much more simplistic than reality. But it's to say that this is a new paradigm. The economy is going physical to digital. I think that we're going to look back at this and believe that fiat currencies in general was just such an absurd concept where we're going to tell ourselves, really, I can't believe that we left the decision of monetary issuance in the hands of a few people. That's sort of the I think the framing and call it past our lifetimes. And then finally, sort of how Bitcoin can sort of evolve as this grassroots movement in emerging markets is what we're starting to see, where you have these parallel economies emerge that end up demanding a more predictable asset than what their current regime offers. If you were to ask a Venezuelan what they would love the dollar. If they could get the dollar, they would love the dollar. But there are strict capital controls, and there are very sort of difficult avenues to access it. Bitcoin perhaps provides a second alternative where businesses start to demand Bitcoin instead of their fiat currency, and it just becomes a spiraling effect from there. Another reason why it's so compelling, and I'll finish off by saying this, and what you alluded to, is Bitcoin represents more than the separation of money and state. Bitcoin represents the separation of property rights and state, where the enforcement of ownership in Bitcoin is not from a top-down local authority. It is enforced by cryptography. You have access to a private key. You own Bitcoin, and no one but that private key is going to dictate whether or not you own Bitcoin. And so it goes back to Bitcoin being this sort of borderless, neutral platform where it doesn't distinguish identity based on IP address or geography or email. It is private keys. And it doesn't rely on a local authority to enforce the property rights or that ownership. It has a completely independent property system. And so that's sort of why I think in emerging markets specifically, we're going to start to see a compelling case to just hold Bitcoin, especially because you can just do it on a hard drive, unlike gold, where you got to carry chunks of it if you want to own it yourself.
Yeah, unless you lose that in a landfill. But topic for a different video. That one with that big story, what was it, like $250 million or something? I feel bad for that person. Excuse me for a second. So, Kathy, she sees this potential for the Federal Reserve to have to adjust their interest rate policy much sooner because of this belief that potentially we could see inflation happening sooner, which is one of the reasons Kathy sees Bitcoin as a hedge. What if she's wrong? And what if the Fed's right? And what if there is no inflation? We see these spikes, inflation goes away, and people are like, well, dang, I was holding Bitcoin for inflation to come. It's not happening. We're back to no inflation. We're back in our deflationary, spiral, thanks to technology and reduction of the velocity of money. Well, screw it. Let's dump Bitcoin.
So I would say Bitcoin as an inflationary hedge is only one of the multitude of use cases for Bitcoin. I think the very unique thing about Bitcoin and its value accrual dynamics is that all use cases are positive sum and additive. So what I mean by that is if you're owning Bitcoin for an inflationary hedge, then that means that the Bitcoin that you owned cannot be owned for using Bitcoin as a remittance mechanism, or using Bitcoin as protection against arbitrary asset seizure, or using Bitcoin as a catalyst for currency demonetization in emerging markets. So there are all these use cases in which I think that the inflationary hedge use case, even if we were not to see Bitcoin, the U.S. dollar, inflate the way that maybe some are expecting, there's still a compelling enough case and a compelling enough demand drivers by which that ends up being a small portion of the bigger pie. Again, we're not really talking about Bitcoin at a $20 trillion market cap here. Bitcoin is like at a $900 billion market cap, and Kathy likes to give.
It just feels big.
Relative to what though? It's a large cap equity stock, if that. Like, to think that something as neutral and permissionless and as monumental as Bitcoin is like half of Apple. Like, I just think that's like, it put things into perspective for sure. I think that Bitcoin has had a very nice run. It really has, and there are these insane cycles, and some people say that they've never really seen these parabolic rises happen as frequently and as condensed as we've seen Bitcoin. But I think that this is a new paradigm for wealth transfer and the preservation of wealth.
And you're not talking about like a new paradigm, like a Ray Dalio, the great deleveraging crash is coming.
No, I'm talking like just a new monetary paradigm of you look at the context of monetary systems. We started at barter, and we went to gold, and we went to fiat. I think that Bitcoin and cryptocurrencies seem like sort of the next logical evolution in how we settle economically.
Incredible. Why not use staking instead of energy transfer, or is that the direction we're going to?
Yeah, again, that goes back to there are no solutions, there are only trade-offs. So proof of stake is an unproven security model relative to proof of work. And we've seen Ethereum as kind of the poster child of some of the difficulties in transitioning from proof of work to proof of stake, and how it becomes much more of a technical risk and than it is sort of this hard base money asset that is predictable and reliable and does a few things right. So I think perhaps the future for alternative networks that might complement Bitcoin, we could see a proof of stake. We could see a proof of stake like alternative, but for something that necessitates high security guarantees, proof of work in Bitcoin is unmatched.
Why? Like what? I mean, has Ethereum had issues, or like?
Yeah.
I mean, if Ethereum hasn't had issues, I mean,
Ethereum has had issues. Ethereum has tried to transition to proof of stake since 2017. 4 years later, it's still reliant on proof of work, and that is the issue in proof of stake. There are a lot of unanswered questions to basically successfully transitioning from proof of work to proof of stake. In a lot of ways, I'd say the simplest explanation for why there are questions around proof of stake is because of its perpetual motion machine-like security guarantee. What I mean by that is, whereas proof of work has explicit costs that are independent of the network mechanics that are being used to secure the network, proof of stake relies on kind of this internal snake eating its tail, where it relies on the underlying assets themselves to secure the network, but the security of that network is only a function of the value of those assets. And so it's this constant sort of back and forth where to bootstrap that becomes very, very difficult. And the incentive,
you can spiral.
Exactly. You effectively can, you can spiral, or it's basically so quote unquote secure where you have everyone staking it and the value is so high that it becomes unusable as a store of value or a mechanism to transfer because most of it is being staked. And so there are definitely questions around proof of stake. I'm definitely not I would say an expert in the mechanics of proof of stake. So I don't want to, talk beyond just, what we've laid out there. But what I can say is that it offers nowhere near the censorship resistant guarantees that a proof of work offers because there isn't that provable explicit cost, right? Miners, for instance, in proof of work are spending billions of dollars up front to build out this network. Whereas proof of stake ends up perhaps even converging towards a plutocracy, where you have just a few stakeholders buying up all of the liquidity of the network and bonding it to secure the network. But then it becomes a matter of just who has more money versus who's willing to take more risk and have skin in the game in explicit costs to secure that network. So it's a much different.
They call themselves the Fed and then start manipulating the currency by being able to release stakes or not.
When you incorporate on-chain governance into that aspect, and that's part of why Bitcoin is again so interesting, is because the governance mechanism is just so dispersed that it's hard to centralize control. But if you can imagine a scenario where you have a network that also has a governance on-chain governance mechanism baked into the network, where the largest holders are the ones dictating the future of that network. And so to your point, it basically ends up returning to status quo, where the people who are able to buy it up are the ones who are controlling the network. Whereas with Bitcoin, it doesn't matter how much Bitcoin that you hold, you're not going to change the way that the network works because the security is not bound to your holdings.
Why can BlockFi or some of these other companies, Voyager, or whatever, why can they pay me 6% interest just for holding Bitcoin there? Is this BitConnect all over again? Is this a Ponzi? What's going on here?
Yeah, that's a good question. I would say there are a few things. The first is there's a misperception between offering annualized rates and annual rates. So what's funny is like the 6% annualized, it's at any given time, but you're going to see massive fluctuations that might end up converging towards 2 or 3% over the year. The second thing is that, there is huge custody risk, and people are taking massive risks by custodying it in sort of a counterparty. And so, I mean, we've seen like hacks and leaks and security leaks from users who end up trying to generate yields by going to these more esoteric products. With BlockFi specifically, again, I would say I'm not the perfect person to speak, but I've like followed Zach Prince, who's their CEO, and they've done tremendous things. They're doing they found an inefficiency in the market, and I think because we're so early and crypto first companies aren't actually as integrated into the traditional financial system as what we might see, in a few years, there's still some significant arbitrage opportunities that users are capitalizing on. I expect those yields to basically converge to kind of traditional savings yields on checkings or savings accounts and traditional banks. But the risk, it's just, much higher risk than putting it on a JP Morgan, 2% savings account or whatever it is.
Now, they say that they take this, that 95% of their crypto or the crypto you have with them is put onto like a Gemini cold storage account or whatever, or wallet. And that 5% is in a hot wallet, which then they have insurance for. Is this just like marketing BS or
No, there's merit to that.
Okay.
There's, most exchanges. So you can think of that in the context of like BlockFi. I'm sorry, you can think of BlockFi in the context of like a traditional exchange, right? Where most exchanges are also storing their Bitcoin in cold wallets, and are projecting what sort of liquidity on a daily basis would be required to be stored on hot, that would basically allow them to facilitate withdrawals if users request it. But you can kind of see a slippery slope here, where if you saw a potential equivalent bank run on exchanges, it would be very interesting to see whether or not they could meet that demand. So imagine every single user on like BlockFi wants to suddenly withdraw all of their assets. Could BlockFi potentially meet that request? And so that's why, in general, users tend to are encouraged to keep as much of it in self custody as possible. And then ultimately play around with, generating yields on exchanges or service providers that allow for that, with a much smaller portion of total holdings.
Got it. That makes sense. So another question that I have is, let's see here. Is it just impossible basically to get into the business of mining because there's so much competition? Like, can somebody just go on Amazon and buy a miner or whatever, I don't know, wherever you might buy it, and actually be competitive?
No, no, you definitely cannot go on Amazon and buy a miner and be competitive. And that goes to show, and we've written research about this, but the evolution of the mining industry, which really started off as like a hobbyist activity, where if you had asked me this question 10 years ago, yeah, you could mine Bitcoin from the CPU drawn from desktops. And then as soon as people started to see the evolution, so we went from CPUs to GPUs to FPGAs to now ASICs, or application-specific integrated circuits, who the hardware has a sole purpose of just mining Bitcoin. So mining has evolved from a hobbyist activity to a professionalized industry, where you have extremely large-scale data centers that are in like the tundra, mining Bitcoin in these plants that require specialized services for maintenance, for operation, long-term leasing and purchase power agreements. So yeah, mining Bitcoin is definitely an industry in and of itself, and one that requires extreme expertise, where your typical enthusiast has no business being involved in.
Got it. Okay, I know you've got to go soon, so I want to ask you one more question. Is there a future, and I don't know if you can answer it, is there a future of expanding your investments into other cryptos, or are we sticking to the BTC?
Yeah, I think we're certainly interested in other crypto assets. We're also interested in figuring out ways to gain more efficient exposure to the opportunity. And so, that's sort of part of my role is thinking about it. But I think in general, Bitcoin's the reserve asset of the crypto asset ecosystem. For institutional investors, getting in on Bitcoin is likely the sufficient enough to gain exposure to the entire opportunity. And I think Ethereum specifically it makes an extremely compelling case for being a complement. And in general, other assets that are being built on top of Ethereum as well make a compelling case. And any asset that provides monetary assurance, but that is unique enough in its ability to provide that monetary assurance than Bitcoin is. We're not
smart contracts. Oh, sorry. I was just gonna say, will smart contracts at Ethereum come to Bitcoin?
I don't think so. As effectively as Ethereum has, because again, Ethereum has made explicit trade-offs where it is not nearly as secure or decentralized, but it is much more composable, and you can have a lot of feature sets. I think that we're going to see a bridge between Bitcoin and Ethereum, I think that there are certainly efforts to build smart contracts on Bitcoin. But ultimately, I believe Ethereum will end up taking most of the share of sort of smart contract applications.
60 seconds on NFTs, and then we got to go. Logan Paul raised $3 million on a trading car he digitally created. What, like, can't he just make 5 more and then dilute the value of that one? I mean, like, how? Yeah, look, I know you guys are interested.
Logan Paul gets it. I think he's one. You have to think of it in the context of he's a content creator. He's on the cutting edge. I don't know if you've been following his sort of Pokemon rabbit hole too. In general, you have to think of these as actually in a lot of ways philosophically aligned with Bitcoin in that value is subjective. People like what others can't have. When you have a world of abundance, especially in the digital world, and you can have provable scarcity, even if that scarcity is issued by a single individual like a Logan Paul, people want the next big thing. They want to feel like they are a status symbol. It's like the same thing of like, why are you going to buy a Picasso? Can't Picasso paint a ton of other paintings? Well, it's like, well, no, Picasso has a life and he's now passed away and he's only had a finite number of paintings, and people render his art as being valuable. But all of that is subjective. So that's more of a human psychology question than it is Logan Paul crazy. I think NFTs are definitely there's definitely a case to be made. We've definitely gotten overheated. We're seeing a lot of exuberance here. But I expect digital watermarks that are provably scarce to be an up and coming use case in the next 5 to 10 years.
Amazing. Absolutely incredible interview. Super insightful. I know you've got to run. How do people get in touch with ARK and give a shout out to the company?
Sure. You can just go to ark-invest.com. We have a website. We publish blogs. And then we obviously have our Twitter, ARK Invest. And you can follow the analysts as well on Twitter.
Absolutely amazing. Thank you so very much for your time. Folks, if you've enjoyed this, consider subscribing and sharing. Thank you so very much again. I look forward to having a conversation again in the future.
Thanks, Kevin. Great for being here.